What's up, everyone? So, today I'm coming at y'all with another stock. And what stock am I going to get in today? It's going to be cruise lines. Now, I'm looking for stocks to add to my portfolio and make sure I'm diversifying. I'm picking different parts of the industry, and one of them is the entertainment industry. And that is something like cruise lines, Disney, and such things like that. Now, my requirements for my dividend portfolio is to have it to pay a dividend. Number two is to have it financially stable, secure. They have to be making money. If they're not making money, it's not worth having. And number three, it has to have a good growth opportunity.
I rejiggered my mind and when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded.
Now, I can go on all in detail about different type of stocks, but as I'm going through this, I am looking for certain stocks to meet my requirement. It might not meet yours. So just make sure you understand that. And my requirements are very simple. I will go through everything so you can understand it. So let's get into this video. Now, Carnival Cruise. Now, I picked Carnival Cruise to look at first because it was a cheap company for a cruise line to purchase. So if you didn't know, Carnival Cruise has a cheap market price for their cruises. So they're cheaper to buy and it's more affordable for families. So I went with that route first. Now, let's look into the history and see how well it has been doing. So year to date, they're down 5.14%. 1 year, they're up 50.67%. 3 years, they're up 146%. And 5 years, they're up 32.61%. So by the growth factor, it looks like it's starting to recover and it's going to have some good recovery. So it might be a good stock to add. Now, I know that they used to pay a dividend and they got rid of it. So that does not meet my requirement in that part. But let's go into the detail and look at the dividend portfolio, see when they stopped paying. So they did stop paying January 2020. So that's kind of what sucks about them. But they could bring it back at any time. This is why I'm looking at it right now. Because once they bring back dividend, should I add it to my portfolio? And it might not be paying it now, but it's always good to look at stocks to see what you might add in the future. And the best thing to do is look at the finance, see if they can afford it. So, in the income statement, I like to go and see what they are making. Do they have a growth or do they have a issue with it? In 2020, I see that they're negative and they did have revenue growth. So that's where I'd look at on the income statement. Now, the balance sheet, I want to see if they're doing well. So what I like to do is see what their cash growth is doing. Well, the cash growth is going down. So financially, that doesn't look good for me. I don't like companies that they lose cash growth. I also want to make sure that their long-term investment isn't doing anything crazy and their liabilities are not going up. Well, it doesn't look like it's doing so well on that one. So the net income is $2 billion. It looks like it's been going up and looks like it's recovering. So it might be a good time to get into this company just because they started being profitable. Let's see, ratio, the market cap. It looks like it has got out of the negative. The P ratio 15.57. So, of course, to that, for the dividend part, they stopped paying dividend in 2020 to fix their finances. So they have yet to reinstate. They used to pay dividend. So we know that they might integrate dividend again. So this is why I'm looking at it. Now let's look at MSN. I like using MSN better to look at finance. I'm used to it. So the first thing I like to do is looking on a balance sheet or a financial the annually to see what the gross margin is to net profit. So this to me shows if they're making money. Now they could be padding it, they could be doing a bunch of different stuff, but I won't look at the finance in any deeper if they are in a negative. And looking at this number, they're in negatives for years for net profit. But they do have a good gross profit margin. So they're using the money on something that they probably shouldn't. But hey, they're in the profit now. Let's look at what they've been doing for market. So 17.5 billion, 18 billion, 20 billion. In 2020, we know what happened in 2020. All cruise line took a hit. And 2021, they still have yet to recover. And now it looks like it recovered for 12%, 21%, or $25 billion. So it looks like they increased their revenue. So it is okay to keep going. And current asset is 3.38 billion, which it shows that their asset went down from 2023. Now the fixed asset is 45 billion. Current liability is 11.62 billion and long-term debt is 25 billion. So if I add 25 to 11, it is 36 billion dollars of liabilities that I'm worried about. Current with their fixed asset, they are above it. So yes, they do have a positive net worth. Now, free cash flow 1.3 billion from 997 million, and they look like they did get out of a rut. So financially they look like they're doing well now, but they still have not start paying dividend. So financially they look like they're stable. They just do not pay a dividend. So it doesn't look like I'll be purchasing them just because the dividend part. Now we can also see how much stocks they grant their shareholders and see if they've been selling it. And Brett David, the chief financial officer, sell 105K worth of stock. That's $2.4 million. They do run a lot of different cruise line, and just based off that information, and they're not paying the dividend, it doesn't look like I'll purchase them because of that. But does not mean that they're not a good growth stock. So it's best to start looking into this, say if it's going to be worth it in the future, because once they do add dividend, they have a great potential to earn a good return. So let's go into AI and see what AI says. So valuation, what AI say is 5 out of 6, which I do say that their valuation is pretty good. The earning is 4 out of 6, which it is a good place for it because it is making a positive income. If you do compare it to everyone else, Norwegian Cruise Line is making more money. Chipotle Mexican Grill, I don't know why I compared it to there. And Las Vegas Sand Corp. So Carnival Cruise is doing better than those. Now, historical performance is 3 out of 6. So I personally think they're doing just fine. They had a few rough years due to the COVID years, but financially health. Now, right now, they are financially stable, but they just got to that point. But their valuation, if you compare it to everyone else, is a good valuation. Now, the analysts do say this is a buy. So once you see that analyst says buy, yes, for the growth potential and valuation for future, it is worth buying. So you should see great return. Now, the forecast, revenue forecast, it's doing above industry standard, but barely. Now let's see if there's any news on this stock that's worth worrying. All right, let's go into this stock and detail what I really think about. This stock looks like it's worth it. So, does look like it's worth it to purchase if you're looking for a good growth. It's a little more on the riskier end. So, my personal opinion on this stock is I'm not adding it to my portfolio until they add dividend and I will reevaluate. It looks like they've just recovered financially from what happened in COVID and they are back into the positive. Now, based off that information I saw of finance, it looks like it financially they're stable now. They were financially struggling for a little bit. Number two, they don't pay a dividend. They used to pay a dividend, but hey, they don't have a dividend. But this has potential for good growth. Number three of this whole portion is, will this stock do good in the future? Do I agree with the analyst? I do agree with the analyst that this stock is going to be doing pretty well in the future. So I think you should add this if you're looking to add a entertainment to your portfolio for a good growth. So I believe this will have good growth, somewhere between 13 to 17%. So that's what I predict this growth is going to be if they keep up with the current trends. Like and subscribe to my video, and that's all I got for you.